Hey guys, welcome to the channel. This is Hamza, and in an earlier video, I talked about how you guys could get started in real estate by investing as little as $25,000. Yes, that is correct. I talked about how you can become a limited partner in a real estate syndication and invest as little as $25,000 and be part of a massive real estate project. For me personally, I have invested this way in the past and seen phenomenal returns over different projects. What I like about this model is that you are one of many LPs in a larger project. And what this means is, as opposed to single family where if your AC breaks down or if your roof needs a replacement, that could possibly wipe out your entire cash flow. Whereas, when you are a limited partner in a large multi-million-dollar deal, when the AC breaks down or they have general maintenance requirements, that is all calculated in the operating expense of that deal. So in today's video, I decided I would talk about how do you guys find credible sponsors to invest your money with. $25,000 at a time. Now, of course, as many of you may know, I myself am a real estate syndicator, which means I have investment opportunities that open up from time to time where people invest in my properties. And the way I structure it is exactly the way I would recommend you to invest. You basically invest on a deal-by-deal basis, which means you need to do the proper due diligence on every piece of property that you are presented with. But for the time being, I'm no longer open to new investors. And the reason for this is my mailing list is just so large that if I was looking to raise capital for a piece of property that I'm interested in, I could probably get it done in one day at this point. But don't worry, I'm gonna show you today how you guys can find your own credible sponsors to invest with. And if you guys really wanna know who I invest with outside of my own funds, and I'll tag some of the people that I trust and invest with. So with that being said, let's get started with today's video. The first thing you need to understand about real estate syndications is they are not REITs and they are not funds. And by that I mean is that you're not trading in a public company and you are not trading stocks that are traded on the New York Stock Exchange or on the NASDAQ. In fact, what you are doing is becoming a true equity partner in the actual real estate, which means you actually own a little bit of that real estate that you're investing in. And of course, the first thing you need to look out for is the due diligence package that your sponsor sends you. So when you're interested in investing in real estate deals with other syndicators, you have to look at the due diligence package that your sponsor has put together. In the due diligence package, what you'll find is you'll find comparable real estate in that area, how the market is doing, what are industry trends, what are the main drivers of that market's economy. You will also see things like occupancy rates, how below market the rents are, if they are indeed below market, what the walk score on that individual asset is. And there's basically going to be a ton of information about the real estate deal that they're presenting to you. Now, of course, you need to understand that these are all important metrics, but you do need to do your individual due diligence on that package, which means you need to verify everything that the sponsor is saying. And with access to the internet being so easy these days, all that information should be easily verifiable. The second thing you need to look out for is the company values. And what that means is, what are these syndicators' core values? How long do they usually hold these deals? What type of deals are they interested in? How they manage deal flow and investor flow? And what type of communication you should expect from them. Now, I know a lot of sponsors who give out monthly reports. There's other sponsors that'll give out quarterly reports. There's other sponsors that will give you one report a year. And this will clearly be mentioned somewhere on the pitch deck or on their website. So look out for that investor communication portion. The third thing you need to ask your sponsors is to show you some full cycle deals that they have closed in the past 5 years. And what full cycle means is they have gone from purchase all the way to sale, giving out profits to the limited partners, essentially you. Now remember, you want to deal with sponsors who have full cycle deals in the past 5 years. However, if you're dealing with a new sponsor and you really trust that person, you can also ask them to show you a 5-year pro forma, which means what they expect this deal to make in 5 years. And you want to ask them questions like, how are you coming to this conclusion? How do you know that in 5 years you're going to be either able to raise the rents or sell the property for a much higher price? And usually the answer is gonna be they're gonna modernize the property or do some major rehab to it, increasing rents, therefore increasing the value of that piece of property. The fourth piece of information that you need from your sponsor or the general partner is the fee structure. As we all know, nothing comes for free, and if you're gonna make a profit, they're gonna make a profit as well. But you need to understand what kind of fees they're charging you for you to deploy your money with them. Now, when it comes to fees, the most common fees that all sponsors will charge are an acquisition fee. This means they get a percentage for structuring the deal. They usually also charge an asset management fee. An asset management fee basically keeps their lights on and helps them manage the asset over the lifetime of the investment. Now, this could be anywhere from 3 to 10 years. So you also have to look out for how many years you want to actively be invested in this deal for. If you're only looking to be invested for 5, but this is a 10-year deal, this may not meet your guidelines. And you're gonna have to look for other sponsors who meet that criteria. Another common fee that syndicators or sponsors charge are disposition fees. And this is usually a certain percentage of the sale price when they sell the property. The fifth thing you could ask your sponsor is to introduce you to other investors in their fund. Now, this is something that most sponsors do with their quarterly or annual investor meets, where investors get together and discuss how much money they've either made or lost over time. You could always ask your sponsor to invite you to one of these events so that you can talk to existing investors and see how their portfolios have performed. This, in my opinion, is the best way to tell how people invested in that company or in that sponsor have performed over the past couple of years. And it's always fun to meet other limited partners. If you guys enjoyed my content, smash that like button for the YouTube algorithm. And just like that, I will see you guys next video.